Right, well, welcome to Crypto Mondays. Let's get to the homepage. 15th of April, Crypto Mondays on Zoom. This is your weekly thought leadership tonic by Crypto Mondays. And just a quick thank you, shout out to Swarm for supporting us. They've supported many of our initiatives. Scalability and performance, regulatory compliance and data sovereignty, operational resilience and cost optimization. So follow ETH Swarm, support them for us. Really appreciated everything they do for us. Forthcoming attractions next week, we've got Kyle Rojas, institutional lead for the Americas for the Ethereum Foundation. And the following week, we've just confirmed Tyler Carter of Splice. He did New York, was it yesterday or the day before?
Yeah,
Um,
Crypto Mondays this week. It was a great night, fun night.
yes, so we've decided we'd like to have him back and with our online audience. So looking forward to that. Oops, sorry. Uh, oh, what's happened there? Cancel. There we go. And then in terms of featured guests, please feel free to suggest featured guests, sharing their thought leadership, personal journey, passions, insights, trends, stimulating thought and conversation, and no shelling. It's helping our community to learn, earn, and connect. So if you know of anybody, please feel free to submit them to us. Then, is there anybody here today who'd like to make an announcement? They've done a product launch, got a new job, raised some capital, anything of that nature? Please put up your hand and let's hear from you.
Yeah, I just want to say we secured another sponsor for the consensus event.
Fantastic. Congratulations. Was that David?
So we'll have Meteora sponsor the event as well coming down. So I think I'm not sure who posted on LinkedIn, but the logos and the invite has been updated for the flyer.
And he's talking about the Crypto Mondays Miami during Consensus, which happens to fall on May the 4th. So it's going to be a Star Wars themed party.
Very cool. Very cool. So it'll be a big one. Great. Anybody else who'd like to make an announcement? Anything exciting happened in their lives in
Thanks,
the
David.
world of AI and Web3? Right. Well, as Lou would say, going once. So here's a QR code if anybody'd like to join Crypto Mondays officially. If you haven't joined our community yet, we'll put that into the chat during the call. And then if you'd like to waitlist for our agent Mondi, so we are building an AI agent Mondi who'll be the concierge for Crypto Mondays. It's been a real amazing experience, pioneering job, new technologies coming out every week. And Alan, who's on the call, Alan Domain, has been building it with his team of AI agents. And yeah, so anybody like to be waitlisted for that, please sign up there on the cryptomondays.io website. And then if you'd like to be on the calendar for Crypto Mondays on Zoom, please join us there. We'll put that in the chat. And then our featured guest today is EconDegen, anonymous, co-founder of ETH Strategy, and a little bit on EconDegen. Academically, PhD in economics with specialized research focus on game theory and mechanism design. Expert DeFi architect, deep down the rabbit hole, well experienced in decentralized finance, and has experience with designing a DAI-like stablecoin that was a single-sided liquidity provision. And on ETH Strategy, behind ETH Strategy, EconDegen, the largest on-chain treasury protocol, which raised 12,000 ETH for its pre-sale and delivered an 18% per annum return over the last 6 months. So just before I introduce EconDegen, I'd just like Lou to say a few words if you're available, and how you came across this possibility for us.
So thanks a lot, Robin. Real quick, you can just go to cryptomondays.io and sign up for the crypto for the Monday beta, which is really kind of the major initiative. We really will really dramatically accelerate our ability to help all of our members and co-organizers and such, learn, earn, connect, and really with a focus on connect, which is what Crypto Mondays is, particularly well suited for. And we also obviously very deeply believe in Bitcoin. We're actually launching the Bitcoin Mondays brand, and we actually launched the BTalk, which was a Bitcoin treasury on chain. It did not, we were actually started a little kind of post the peak of the Bitcoin treasury boom. But I'm a huge believer in Bitcoin treasury under just the simple premise at its basis. It just enables people to stack sats faster. And, obviously after Bitcoin, there's Ethereum. And when we were building our Bitcoin treasury on chain, there actually was an existing Ethereum treasury on chain that had actually executed exactly what we wanted to do. They had better timing, and I assume probably a better execution. And so, I was super excited to have this opportunity to have him come join our community, talk about, he's obviously does things outside of his work with ETH Strategy as well. And so, I was excited to have him come and share his story, and learn more about ETH Strategy. So EconDegen,
Thanks, Lou.
super happy to have you.
Over to you, EconDegen.
Yeah.
Mr.
Thank
Guest.
you. Thank you. Oh, can you guys see me? Thank you, Robin. Thank you, Lou. I am super excited to present to you guys today. I'm hoping that I guess we all find it educational, and we might I'll talk a little bit about ETH strategy at the end, but I'll keep the shilling to sort of a minimum.
No, and just by the way, you're talking about ETH strategy. It would not be considered shilling on this call. You actually were specifically here to. I'd love to learn more about ETH strategy because you executed, on it well, and I'm sure there are other things on the roadmap.
And I think happy to talk about sort of like to go into detail as to what happened, what our wins and losses are on ETH strategy as well. But the talk I did prepare today, because I am very, very passionate about, I think, this particular topic, is options and DeFi. And we'll see sort of how this links directly to ETH strategy sort of in a little bit. But I think it's a super interesting topic. And it's a topic that I think is sort of not really well understood, I think, in this space. So it's really important, I think, to dig into it. So I think before we go any further, I think the first question I want to ask everyone is sort of like, what makes an asset valuable? Like fundamentally, what makes an asset valuable?
Yield.
So, yield. Exactly. Yes, yield.
Oh.
Actually, that's exactly the answer I wanted to get, right? So it's all about cash flow at the end of the day, right? It's all about
Hold
yield.
on a minute. You're telling me I shouldn't own Doge?
I think Doge I think has no great arguments for it. Bitcoin, I think is starting to get yield itself. Doge, I'm not so sure. Maybe if their L1 can ever get off the ground. So fundamentally it's about cash flow. How much can the asset return long run? But I think also the other thing that's really, really important is risk. And I think we always talk about risk, and it's one of those words that's sort of bandied around very like almost nonchalantly. I think it's super interesting though that the people who sort of invented sort of like risk and return, modern portfolio theory, so to speak, they came up with this definition of risk, which was sort of the standard deviation of the return. But it's not a definition that they were very, very happy with. So I think up to this point, up to this day, we kind of use risk as standard deviation. We use standard deviation as risk, but no one is theoretically that happy with that, because obviously standard deviation incorporates sort of like the whole variance of the asset, but it incorporates sort of like positive risk as well as negative risk. So it's not sort of like fully intuitively what we'd expect risk to be. But I sort of like put this here because I think it's important, because without sort of understanding that assets fundamentally come down to risk and return, it's hard to sort of like understand how options work. So I think digging in a little bit more on sort of like what is an option. So, what is an option, right? So it's the right, but not the obligation to buy something, what they call a call option, or the right, but not the obligation to sell something. So usually an asset, it's a put option. And so I think these matrices or these curves, I think a lot of people will have seen them, basically sort of like long call, long put, short call, short put, yeah. And I think, most people will have sort of seen these. I think this is sort of like the sort of thing that you'd encounter sort of when you first sort of look at options, right? And this is what we call sort of the value of the option sort of at expiry, yeah? So, if you exercise the option, you only exercise it if the option is what we call in the money. So you make, you have the option to buy ETH at 2,000, you exercise it if the price of ETH is over 2,000, you don't if it's under. And you make money if it's over 2,000, you don't if it's under. I think everyone kind of understands this about options, but this is just sort of scratching the surface. This is not really the exciting thing about options. So I think what's really exciting about options is not what happens at expiry, it's what happens before expiry. So if you look here, I think options become very, very interesting sort of before expiry. So if you can see sort of this blue line is sort of like following sort of the expiry value of a call option at expiry. Yeah. So it's that same sort of like kinked graph that we just saw sort of previously. The orange and the dotted lines show the value of the option before expiry. And what we notice is that it's no longer this kinked line. It's sort of this smooth, sort of curved line. And I think this is what makes options, I think, super exciting and super interesting. Because I think out of sort of basically all asset types, options are really the only one, or at least the most natural one, where the value of the option with regards to the underlying, so assuming that these are ETH options, the value of the ETH option with regards to the ETH underlying, it's curved. It's sort of like it's not a straight line. Or for the traders in the market, your delta is not constant. Your delta is changing. And I think this is one of the coolest things about options. You could do a lot of really, really interesting things about this options. But I think before we dig into that a little bit more, I think the fundamental thought that I think we need to ask ourselves is sort of like, why is it valuable, right? So if we're before expiry for an option, why is this option valuable? And in order to understand this, I propose sort of a thought experiment. Yeah. So ETH today is at 2,400. Yeah, 2,350 I think is where it is last time I checked. So an option today that expires at $3,000. So that is a strike price of $3,000. So an option to buy ETH at 3,000. That's basically worthless today. How about in a week's time? Still not worth very much in a week's time, because it's unlikely that sort of ETH will reach 3,000 in a week's time. How about in 6 months' time? So that option is actually quite valuable, right? Because you would not exercise it today because ETH is not at 3,000. But ETH could easily reach 3,000 sometimes in the next 3 months, right? It could easily reach 4,000 sometime in the next 6 months. And then if it does reach 4,000 next 6 months, then this option becomes very, very valuable. And because there's this sort of like what they call time value of the option, the optionality of the option itself, so to speak, is valuable. And that's why, this sort of curve, this option curve sort of floats above sort of the expiry the expiry value. So another way to think about it is, if we're at our current price today, then the option value fundamentally is how much it's the probability that we're above this strike price sort of at expiry. So won't go into sort of like too much details on Black-Scholes. I think Black-Scholes is the canonical sort of like option pricing model. I think it's a spectacular sort of like spectacular equation. Scholes and Mertens, who was the third guy, so very often it's called Black-Scholes Mertens. Scholes and Mertens won a Nobel Prize for Black-Scholes. Black unfortunately passed away before he could win a Nobel Prize. And it is like the derivation is not that complex, but it is beautiful. Like you can see there are two places where they make an assumption. So there's the risk-free assumption, which simplifies the whole thing, allows you to make sort of closed form solution. And then they end up with a stochastic differential equation, second order differential equation. And apparently that's the heat equation. And so they find a closed form solution sort of like out of thin air. So apart from those two areas, I think the whole derivation is super easy to sort of look at. I think it's extremely beautiful. So if you ever want to sort of like look at sort of Nobel Prize winning work, I think Black-Scholes is one of those pieces of work that I think is very, very approachable. It's such a beautiful piece of sort of like mathematics.
I think they were Stanford professors.
I think they were Stanford professors. Yeah. Can't remember off the top of my head, but I think they were Stanford professors. Yeah. And then Scholes and Mertens famously started a hedge fund after they won the Nobel Prize, and famously it went bankrupt. I think they lost something like $30 billion or something like that. So it shows that theory works in theory, but it doesn't always work in practice. But yeah, I think if anyone ever wants me to talk about derivation, happy to go through it. But I think we wouldn't have time today, and lots of people get bored. I think I already talked a bit about this, but options are different. Options delta varies with the price. If you hold ETH goes up by $1, you're always $1 richer. If you hold an ETH option and ETH goes up by $1, the amount that you're richer by depends on where along the curve you are. So where along this curve you are. So the closer you are to the money, the more it goes up by, essentially. And so Black-Scholes is beautiful. But I think the thing that's sort of like most exciting to me about options, both in DeFi and sort of like even TradFi, is that I think Black-Scholes is super flawed, and it's still an active area of research as to how we actually deal with all these options and how we actually deal with all these flaws. So Black-Scholes is flawed because stock returns, they assume stock returns is geometric Brownian motion. It's simply not true. This makes the assumption that
I think the fact that they lost 30 billion proves your point.
Yes, they got killed by skew risk, basically, which should not happen under geometric Brownian motion. They assume continuing returns, not true, and they assume a constant variance, which is also not true. Where did they get this variance from? And so there's theoretically a lot of sort of, I think there's a lot of places to mine, and a lot of places where you can find, I guess the pun is intended, but where you can find alpha, right? In this space. And this is from a theoretical perspective, right? This is unsettled theoretically. So, as opposed to, I think, like, let's say meme coins, which I think is clearly a negative sum game. Options it's not a clearly sort of clear-cut sort of system, sort of like in any way, I think, at this point. And this is why I think it's super exciting. I think it's something that people should look deeper into. And I think DeFi, so now if we combine, so sort of like gave a quick theoretical overview of options, I think there's some really, really cool DeFi protocols that are building options and using options. And okay, ETH Strat is one of them, but I think I'd like to highlight some of these other guys first. I think Deribit, I think are really, really good sort of what you call like bog standard sort of options platforms. So you can do a variety of different things there, but I think they're very, very standard. And so if you go there, you'll deal with market makers. I think Panoptic, I think, is a super cool sort of like DeFi primitive style options platform, basically. So they basically take the idea that that liquidity provision in an AM system, so constant product sort of liquidity provision, they take that idea that these are essentially a ladder of options. So if you're providing liquidity, essentially what you're doing is you're selling a ladder of calls and you're selling a ladder of puts. And they basically posit the question, well, you're providing this liquidity, but most liquidity providers don't make nearly enough fees to sort of like to sort of counteract the options that they're giving up, because options are quite valuable, especially on these volatile crypto assets. And so what you can do there is you can deposit your LP and people will come and buy your LP as options. So it still works as LP until someone comes and sort of like rents your liquidity as options. But I think that's quite a beautiful sort of idea. So I don't think they're as successful as they should be yet. And I think part of it is that I think their UI is not the easiest to navigate, but I think super cool platform, super cool idea. I think Prodigy Fi is also pretty cool. So I know the founders quite well, hung out a little bit, but I think Prodigy Fi, I think the idea basically is, let's say you want to sort of like quote unquote DCA into ETH or into Bitcoin, yeah? So assuming that you're DCAing over sort of a long period, or you're trying to sort of enter sort of at a long period, instead of sort of, just buying when you feel like buying, if you set sort of like clear prices that you're willing to buy at beforehand, that's essentially a put option. And if, you trying to time the market and sort of you sell sort of when you feel like you're near the peak, essentially you can be selling a call option. And so I think Prodigy Fi sort of like works off that fact. And it basically gives you this offer where, let's say you think that if ETH goes down to 1,500, you'd like to buy it at that price. It will let you sort of set that price, essentially a limit order, but also give you like pay you yield while you do so. And that yield are people sort of who are basically taking the option to sell you the asset sort of down the line. So I think it's also a really, really cool platform. I think sort of like moving beyond sort of like these two like standard options, I think a lot of polymarket markets can be sort of envisioned as options. So one in particular that I've been digging into are the 15-minute Bitcoin markets, which are a lot of fun. But essentially, you can use Black-Scholes like sort of systems to try and price these markets. And at least in 15-minute ranges, prices do act a lot more like geometric rounding motion. And so you could use an options framework to try and make money off polymarket as well. So I think there's a lot of excitement there. And I think this is why I think, options are really, really cool. So I think now sort of like giving a bit of a shill on ETH strategy, why do we care, right? So essentially, ETH strategy is a protocol that has two sides to the market. One side is providing leveraged ETH. So that's what we call the strat side. The other side is providing the leverage. And what do they get for the leverage? Well, they get convertible debt. And what is convertible debt? Well, it's debt with an attached option. And so when you come provide debt to ETH strategy, what we call bond to ETH strategy, essentially you get an option out of it. And if you value it with Black-Scholes, Black-Scholes is not necessarily the best model to value, but it gives a very, very good sort of like ballpark. You'll find that our options are actually we're giving our options very, very cheaply, right? So, the option, so our options are 4-year options. The sort of like Black-Scholes price of sort of like a 4-year option on something like ETH is somewhere between 45 to 50% of an ETH. So in order to get the same option, it's quite hard to find a place to sell you that option, but in order to get that same option, you'd have to pay sort of like about 0.5 ETH. And so with us, all you have to do is to provide the debt, and then you still have the debt, but you have the right to convert it as well. So you've kind of you've made a free sort of like 50 cents. And I think the nice DeFi thing that we do on top of the ETH strategy is that we give you a convertible note as not just a full note, which is what TradFi does. We give you sort of an NFT and a fungible thing, and these two things together are the convertible note. So in order to exercise your option or at the end of the period get your debt back, you've got to have both of these things. But in the meantime, because there's an NFT and a fungible part, you can sell that fungible part, which we call CDT, back to the LP in order to get more capital efficiency. And so this allows you to do some really, really cool things. Like, for example, I think this is particularly cool. You can get what we call half price ETH. So you can leverage up your ETH position. You bond with us, you get an ETH option. You sell the CDT in the liquidity pool, and then you bond again. And you can get extra ETH exposure this way. So you get more ETH exposure than you would get by just holding pure ETH. Essentially, if the price of CDT is 50 cents, you would get your ETH at 50 cents. So it's like half price ETH. You're kind of getting ETH exposure for half price. So I think this is a particularly cool thing. You could make 25, 30% on calendar spreads. So you bond to ETH Strat and then you sell your option on Derive. It's fully covered by the option on ETH Strat, so you don't have sort of any sort of delta risk. So you're not sort of like, it's basically risk-free. It's risk-free sort of like yield, right? So okay, there's a few sort of like edge case risks and all that sort of stuff, but essentially it's risk-free yield. So 25, 30% on calendar spreads. You can gamma scalp and make more. So gamma scalping is a particularly cool thing where you take an option. For example, you bond to ETH Strat, but you take any sort of option. You delta hedge that option using spot perpetuals. So this would be you go short on ETH using a perpetual. If the market moves up, your option increases by more than the hedge goes down. If the market moves down, your hedge value increases. So your spot short will increase in value more than your option decreases in value. And the reason why, so either direction the market moves, you make money. And the reason why it works is because the option has positive convexity. So I don't know if we remember our sort of like, this would be pre-calc, right? But a convex function is one that has definition is like it has a convex upper level set, but basically it's sort of like a smiley face as a convex function. So I think that's really cool as well. And so I think ultimately, I guess, I don't know if this is a call to action at the end, right? So we've built a great source of value and yield engine, and we'd love everyone to sort of make money off it, or even better, build on top of it. And here are some things that I think would be cool to build. So I think stablecoins, I think could be really cool. So you could build a stablecoin on top of this calendar spread. And we built a vault already. It's returned about 18% over the last 6 months. I think as it said sort of at the beginning. So it's not been a great market. You could do even better. So if anyone's inspired to build a stablecoin on top of it, I think talk to me. But there's also some more like esoteric sort of ideas. I think you could build a true volatility token. So things like VIX, for example, it's a volatility index. The problem with VIX and sort of VIX indices are that the indices lose value over time. So in order to maintain sort of like the options exposure that's required by VIX, you have to go essentially negative expected value. So you have to go negative EV, which means that you cannot hold VIX for the long run. Like, even if you think the market's going to be super volatile for the next like 3 years, you cannot hold it, for the long run. I think with our convertible notes, because they're given cheap, you could build a true volatility token. You could build something that actually sort of made money when ETH went up and down. You would do it with some sort of gamma scalping sort of system, I think. With half price ETH, you could build sort of like a hyper leveraged sort of ETH token. So you could tokenize sort of this ETH exposure. I think do some cool stuff on top of that. Or you could build a prop fund. And we are probably going to launch a prop fund ourselves, but I think the main thing for it is marketing. So we'll probably stream sort of most of our actions because we want to show people how to make money off this. So I guess that is my presentation. So hopefully it's somewhat educational, and happy to sort of field any and all questions on anything, basically.
Wow. Okay, that was very deep down the option. We should have had a 101 after the in the description. But I think I'm I assume I'd at least be average for the people on this call, and I might have got 80% of it, 70%. But it was super interesting. And I get back to it. Obviously, you've got a passion for for options and risk, and personally, I thought the stablecoin idea on top of the platform is super interesting. But on the ETH strategy, itself, you've been doing this for a while now. It's been out there and live. What are the main things that you guys have learned?
I think that's a great question. I think probably
and if anybody else, I'll take one more. If people have questions, you'll raise your hand, and and appreciate you staying on and answering some questions.
I think learned loads of things. I think from sort of ETH Strat. I think one thing I noticed, one thing that became very clear to me when we did a public pre-sale. So we did a private pre-sale and then a public pre-sale, and then we raised about 8,000 ETH in total. Like, I don't know whether this is the first time I've sort of gone through sort of the fundraising ringer, at least successfully to the fundraising ringer. And I realized that there was an exact moment, at least for me, where it seemed like everything clicked. And it happened when we found one person who was super bullish. So we found one investor who was super bullish on the idea. And on the same call where we talked to him, he's like, I'm going to put in like 1,000 ETH. And then once he closed, everyone else closed sort of like extremely quickly. So I think that's one thing that I think I learned, I guess, from a fundraising perspective. It's like you need one huge supporter. And then suddenly
I think that's called people are sheep.
Yeah, but you need that, like, I don't know how to put it.
Yeah, people are sheep. You need that lead investor because it gives people like, okay, somebody's going to do this. I better do it.
Yeah, but he wasn't even a lead, really, right? The crazy thing was that, like, I think most of us didn't even know he existed.
Oh, he was totally a lead. A lead is somebody who gets everybody else to come in. That's a lead.
Yeah.
Yeah.
He might not look like a lead or seem like a lead from a VC perspective, but that's a lead.
Did not act like a lead from a VC perspective. But yeah, like, no, it's like, it was crazy how it worked. And I think the other thing that I really learned is that, I guess somewhat negatively about the crypto space is that I think the current meta for a lot of crypto funds is this, especially TVL deployers, is you promise you have to promise very, very high yields, and a lot of it comes in token rewards. So a lot of it comes back to sort of like, in one way or another, dumping on retail. I don't love that meta, and we haven't launched a sort of like governance token. We have plans in the future, but we wouldn't want sort of retail to get dumped on. And I think we have great yields, right? Like 18% is a great yield. And I think it's very, very competitive compared to like what people's real yields are. But we found that it's very hard to get people over the line off that.
So
I think that's
just FYI, just FYI, screwing people is a meta in every industry.
I didn't realize how strong it was. I think in crypto, right? Yeah, which perhaps I should have.
I don't think. I mean, seriously, did you ever see The Wolf of Wall Street?
I did. I love that movie.
Yes, exactly. I loved it too. It's epic. But that was a true story, right? And that's just like the tip of the iceberg of what's going on Wall Street for 100 years. Seriously. So, and it's just, maybe it's more public here. I don't know. I mean, they make movies about it, but still people go, oh yeah, Wall Street. You're not like those pros at Wall Street. And it's not like that's gone away.
They presume that if you say crypto, that it is fraud, and they don't presume that about Wall Street.
Yeah. Well,
so actually the other question, and then I'm gonna have hands and go to hands. But the other question, because obviously you've been thinking deeply on this whole option side of things, and obviously there's this crazy thing happening today and yesterday and the day before that, if it was during the week, and that was STRC. So I don't know if you've looked at that and have an opinion on what's going on there, but that is crazy.
I think STRC is.
And explain what it is for the people who don't know.
Yeah, so STRC is essentially preferred. It's preferred equity, basically, right? So it's like, I think Saylor has launched. So Saylor's got various sort of tokens, right? But most famous, of course, he's got MSTR, and that's sort of like the main equity token. He's also done some convertible debt, which is what he's done sort of in the past. Now he's launched this new sort of like essentially preferred equity layer. So it functions as equity with a dividend. So it's like, yeah, preferred equity, preferred debt. I think those two things are essentially the same thing. It's paying out, I think, 11.5% right now. And I think the market is very, very excited about it. I think
yes, it has found product market fit.
It has found product market fit.
Market fit.
I think it's interesting. So if you ask me my personal view on it, I probably would not buy it myself because I don't think it's worth it on the risk curve. Because I think the other two extremes are better. So buying pure micro strategies, I think is probably better if you're just a Bitcoin bull, for example. Or you can buy pure Bitcoin if you're a Bitcoin bull. But micro strategies give you some sort of leverage exposure to Bitcoin. And if you can get your hands on it, probably convertible debt is better than sort of like STRC as well. You probably yield higher. At least
you're saying the convertible debt that MicroStrategy has outstanding.
The MicroStrategy gives, right? So it's harder to get your hands on it than with ETH Strategy convertible debt, but like I assume that if you're a Wall Street hedge fund, you probably can. So I think STRC is sort of like this in between sector, and I'd say the big dangers are that I don't think there's any like it's not debt, yeah, it's like preferred equity, so there's no expiry date. They can change. I think MSTR can change the coupon payments as necessary. So there's no like real recourse.
Yes, and Saylor in his brilliance has sold that as a feature, not a bug.
Yeah, so I think everything for Saylor is a feature, and so yeah, I'd be a bit worried about sort of holding that long term. It's a cool product,
but I mean, what it's done, right? It's for the market. I mean, and at some point the price has got to go up if he keeps on buying that much. Yeah, he's about to pass BlackRock if he hasn't already done it. Yeah. Is the biggest holder again in MicroStrategy. So I'm sorry, Robin. I can't see the hands. Do we have any hands up? I'll let you take over from here.
Yes, yeah.
I had just a quick question, and that is if you can share your PowerPoint presentation, because I missed, unfortunately, the first part of your presentation.
100%, of course.
Thank you.
Thank you, Steve.
Okay. I have a question. What would you say if you can earn extra yield on the assets like Apple, Nvidia, 10 to 15% annualized on top of the
So you're
dividend
saying
paid?
that, sorry, so you're saying like, what would I say if you could make 10 to 15% on Apple
Yeah,
or
we've
Nvidia?
just discussed MicroStrategy. Yeah, MicroStrategy is very related to the price of Bitcoin, which is disappointing today, right? But you can
Oh,
earn,
so you're saying like we could build a DAT on sort of Apple or Nvidia or something like that?
yeah, you can earn something between 10 to 15% on by holding the stock like Nvidia or Apple or Tesla. Would it
I
be good
think,
for you?
so I think it's interesting. And it's obviously something that I've thought about before. I think Bitcoin and Ethereum, crypto as a whole, I think if you go for like sort of like, I'd say what I would call sort of a standard DAT, right? So not so focused on ATMs. ATMs are a little bit Ponzi-ish, right? But you really focus on sort of like this idea that, okay, there's some sort of convertible debt or some sort of debt mechanism, and we stack this asset, right? So we get leverage. Basically, we give out some fairly good perks in return for leverage. I think it really works for assets like Bitcoin and Ethereum, because I think no one really agrees on the price of Bitcoin or Ethereum. Like, for example, ETH today is 2,400. Yeah. No one actually thinks that the fair price of ETH is 2,400. So everyone who holds ETH thinks that the fair price is much, much higher. So I hold ETH. I think it should reach 10,000. I said that like this is not financial advice. I said that last year. It did not reach 10,000. But then there's a whole bunch of people who think that ETH is essentially worthless, right? They think that you talk to Sol Maxi, they think that ETH is going to go to 500. Yeah. I think Bitcoin is similar, right? Like I'm probably bearish Bitcoin long run, so I probably don't want to hold Bitcoin in the long run. I think it's a topic for another day. But obviously, you've got a large group of Bitcoin holders who think that it'll go to $200K or $1 million. Yeah. And these are all the Bitcoin whales. So I think the issue with a DAT for, let's say, Apple stock or Nvidia stock is I'm not sure whether there's a large enough group of people who are so irrationally bullish about these stocks that they're willing to sort of like give up. Essentially, they essentially give up things in return
Like give up
for sort of leverage. So we like, so for example, like ETH Strategy, we're giving up we're giving up sort of some of our upside. That's what the convertible notes mean, right? So we're giving up a significant chunk of the upside. So it's asymmetrical in terms of sort of like in terms of payoff, right? And in order to attract this long-term debt, you kind of have to do this, right? That's what makes these DATs fun, is that you've got sort of the irrational bullishness on one side, and then the other side, you've got people who can make money. Like STRC, for example, right? You're paying significantly above sort of market rates for debt. I guess it's not really debt, but you're paying significantly above sort of like market rates of debt. And so the question is like, could you find sort of enough people who are super bullish on, probably not Apple, right? But Nvidia, for example, if we think AI is going to take over the world, then maybe that works. Like it could be. Like I think there's definitely a space for it. Like maybe something like Anthropic, for example. Like people are very bullish Anthropic. So if you find some way of like just acquiring Anthropic stocks, I think you could do some really cool DAT things.
Got it. The cool thing is that you don't need to sell your Ethereum or Bitcoin. You can use them as a collateral to borrow on Aave. If you take a look at Aave, they have pools with the borrowing rate between 2 and 3%. You can borrow the USDC, and those pools are underutilized. 180 million is lazy capital on just on the Binance Smart Chain. So stake your ETH, borrow USDC, buy Apple, and you will earn extra 15%.
Well, I think I think leveraging ETH to buy Apple is a bit dangerous, especially on Aave, right? But
why especially on Aave?
Because you get liquidated, right?
Yeah, this depends on just maintaining your kind of rational ratio.
Yeah, but I think that's I think the beautiful thing about MicroStrategies, right, and what we're trying to copy, at least on the ETH strategy front, is we want unliquidatable debt, which is like in TradFi, it's a given. Like there's no such thing as liquidatable debt. You can't be like, oh, you can't pay. And you get a lot of these takes on crypto Twitter where they're like, Saylor's about to be liquidated, and you know, if Bitcoin drops to like 60,000, he's going to be liquidated, and Bitcoin's going to drop to 12,000 or something like that, which is like totally not how corporate debt works. But you know, crypto Twitter kind of thinks it is. So I think Aave is obviously a really, really strong tool, but I think for us it's a bit, you know, like we don't want the liquidation risk.
Okay, yeah, got it. Thank you. By the way, this is a perfect use case for the options because, again, people who consider the opportunity of holding the RWA-related assets during the bear market today, they ask, okay, I'm happy with the yield 15%, but what about the stock price itself? Can I hedge? And the thing is, can I buy the put option today for Apple on the Binance Smart Chain or Polygon?
I don't know. I'm like, you can definitely buy puts on like Robinhood, for example. So I don't know whether there's puts on Binance Smart Chain right now.
Okay.
Well, where's the
You're
yield
not
coming
considering
from where's the yield coming from for Apple? Is that just equity growth, or?
you're not considering the opportunity to create the market, the option market for tokenized stocks, right?
I think we're like, yeah, I don't like, I think we're more option providers than anything else. So I think there'll be other people in the space who will build options on these sort of stocks.
Got it.
Because it's you know, these are tokenized, right? It's actually very easy to create, like once you have a tokenized product and you have some sort of DEX liquidity for it, it's very easy to create options markets for it.
Got it. Thank you.
Thanks, Vitaly. EconDegen, is it a institutional product only, or is there a consumer version of it?
No, we are not. We're fully on chain, so we're not really institutional at all, I'd say at this point. Fully on chain. There's a front end, and actually everyone who interacts with us goes through our front end right now. So whether you're a fund or you're an individual, you all go through the same front end.
Participate, correct. Because maybe there's something we could do with Crypto Mondays as well, as bringing it into Agent Mondi, and yeah, so
Yeah,
bring it as because we learn, earn, and connect is our main mission. So offering the community opportunities to learn, earn, and connect. So if we could probably find a way to bring it in as one of the earn components.
yeah, no, absolutely.
Definitely.
Great. Okay.
Yeah. I think like obviously like Saylor's notes, or basically everything Saylor does is basically sort of institutional, and I think part of the reason why we did this is because we wanted to democratize a lot of it.
Yes. And what is the ratio? Do you know what the ratio is? Are institutions getting involved, and to what
With
extent
us,
consumer versus institutional involvement?
it depends on what you mean by institutions. So we have some like funds who especially participated in our pre-sale. So I'd say probably like 40 to 50% of our pre-sale was funds. Our current Vault product, I think, is probably 60, 70% from sort of crypto funds. They are institutional in the sense that they're managing other people's money, but they are not TradFi institutional in that sense. Yeah. So yeah, they're like, I don't know. It depends on where you are in the range of sort of what you mean by institutional. Like I'd say we have a fair number probably at least 30-40% of all our holders are what you would call sort of like are clearly retail. is what I'd say.
I've got actually one question or thing that you said that I didn't understand was you referred to the STRC issuance as a Ponzi scheme.
Did I say STRC was a Ponzi scheme?
I think that's what I heard.
I think ATMs are Ponzi-ish.
Yes. Well,
Not
yes.
STRC.
The ATM. Well, I'm sorry. Yes, but I mean the STRCs are issued at the market.
Oh, okay.
Right. I mean, I assume that's what you were talking about.
Okay. Sorry. I was not referring to STRC there. I think STRC is less Ponzi-ish because it's a thing, right? It's an asset that has some sort of value. You could argue that it's not a great asset.
Okay.
I would say when I say
I
ATMs,
misunderstood. Yes.
I'm talking more of like DATs who like there were a lot of DATs.
Yes. It's just a way
who sold their stock at the market to buy their underlying token.
Yeah.
And so that's
by the way,
almost clearly
Yes. It doesn't mean that those I mean I don't know the particulars of any of them, but like personally, add them back.
Yeah, it doesn't it like obviously you should farm your premium, right? But if that is all you do, at some point your premium collapses. So you kind of need like different links to your strategies. And I think it's like honestly, I think Saylor's done it very well. I think Saylor has like the marketing of a Ponzi scheme, but if you look at the underlying mechanics, it's not really very Ponzi-ish. It's actually a very, very nice.
Well, and by the way, he is continued to innovate.
Yeah.
Right. That's been super impressive. Yeah. STRC, the amount of money that's now flowing into the industry through STRC, it's a game changer.
I think he's definitely been, out of all the DATs, which is funny because he kind of kicked this off, but he, as the first one, has been very, very innovative for what they've done.
Yeah. So cool. So great. Thank you very much, Robin. I'll hand it back to you for the finish.
Yes, thank you very much. Thanks, Lou. And EconDegen, can you put where people can contact you in the, how do you like to be contacted, on X or into the chat?
Yeah. So I'm at EconDegen on Twitter. So that's me. So you can follow me. You can DM me. DM's open.
Brilliant.
I'm also this tag on Telegram, so you can also DM me there, and I'll talk to you. And yeah, I'm happy. Like I am very happy and very excited to talk to anyone who is interested in options or in DeFi in general. Like I love DeFi.
I can see that. You're super passionate about it, eh? That's great. Well, thanks so much. That's been absolutely fascinating. I love the way that you approach it. A nice light way of looking at it as well, even though we went way down the rabbit hole there. But that's fantastic. So the video will be on YouTube in the next 24 hours. And I just want to thank you so much for sharing yourself and your journey and your passions and options and all of these wonderfully complex investment things that you've come up with. So much appreciated.
Thank you so much for having me.
Thanks everyone for being here. It's awesome. We'll see you next week.
Thank you, guys.
See you guys.
Bye, everyone.